What's up, guys? Welcome back. Today's Thursday. I just found out, well, I didn't find out, but I just realized that tomorrow's Good Friday. I don't think the market's going to be open tomorrow. So this will be the last day of the week, which will give me a lot more time to catch up on editing, which I desperately need. But anyways, I just came into the living room and saw this, and I immediately said, yes, they totally should. That would be amazing. Holy crap, if they did that. Oh my gosh, that would be insane. So they were just saying that Tim Cook was saying that like deal size is not an inhibitor. He doesn't really worry about that. If they want to acquire a company, they will pretty much do that no matter what. So I never even heard about this until now. So that's weird that they're talking about this. The bell opens in 10 minutes. It looks like stocks are definitely going down. So I'm thinking about writing a covered call today. So that's going to be the theme of today's video if I go ahead and do that. Because I'm thinking stocks might be going down a little bit. If I can write a covered call, and I'll have a really good chance of keeping my shares and making that extra profit. So yeah, we'll see what happens when the bell opens. We'll see where Apple is at, and then if I think they're going to keep going down a little bit or just kind of staying where they are, definitely going to sell a covered call and try to make a little bit extra profit. It's really not that much, but because I only own 100 shares, I imagine people who do this like all the time probably own lots and lots of shares because you can make a lot more money. So yeah, we're gonna come back in a little bit and see what how this plays out. All right, so this isn't good. I'm imagining we're gonna lose money again. This hasn't been a great week for us, but we have some opportunities to sell some covered calls and take advantage of the fact that stocks are not going up. Wow, NASDAQ to post first 3-day losing streak. That's not good. But, oh, Apple's starting to go up. Okay, we're not going up a lot. We might still give it a try, see if we can make some extra money. So let's see. Oh, real quick, you know how like when they do the opening bell and you see all those little squares, green and red? Well, this is actually a close-up of what are in those squares. They're individual stocks, and you can see there, this is like the best 3 performing right now in the Dow or whatever. JP Morgan, Disney. So that's a close-up of what are actually in those squares. So if you ever seen, I show it quite often when they do the opening bell. You see all those little squares lighting up and all that stuff. Well, yeah, each individual square is an individual stock that they are tracking. So now you guys know. I was reading this article. It's about 10:30 right now. Tesla Musk tells disgruntled shareholders, buy Ford. I love this picture. It's just hilarious. Which is funny because I actually did just buy some Ford shares because they have a higher than 5% dividend, which is really good. And so picked up 100 shares. It wasn't that much because its stock is so affordable. And I triggered a limit order to buy some more Tesla call options. So it was trading like at $30.60 at the time. So I set a limit order for $30.25 just to see if it would come back down. And then I wasn't really paying attention, and sure enough, it came back down. So got in at a cheaper price, so that was really cool. So yeah, but this is funny because this guy.
Regular competition like other companies. What do you mean by doomed? At some point,
this guy,
on pricing is limited
wait, I don't think that's him, but
sells electric vehicles at a loss.
Yeah, this guy he says Tesla value is inexplicable. And my reaction would be like, who cares if it's inexplicable? It's going up, so if you want a profit, then buy it, stupid. Like, the more you complain about how ridiculous it is that it's up, the more money you're missing out on by not investing in it. So that's to his own detriment that he's not investing in it. I mean, clearly it's going up, whether you like him or not. You can make money off of it.
So, Bob Nardelli, do you see any possible way that this works out for Tesla? Keeping in mind that
yeah. So, anyways, I won't bore you with this. I'll post a link to the description of this video or this article if you want to see it. But yeah. So we're going to get ready to sell a call option on Apple because I was talking about that earlier. I think I'm going to go ahead and do that. So we have 100 shares, which means we can quote unquote write a covered call, meaning sell a call option. So we're going to go ahead and do that. So here we go, options. And now I'm going to go. Now remember, if you're buying a contract, if you're buying a call option like what I normally do, I usually buy contracts to hold and then I sell them for profit. You're going to be doing buy to open, but since I'm selling a contract to open a position, I'm going to be clicking sell to open. So normally if you're buying a call contract, you buy to open and then sell to close. But if you're selling a contract, you're selling to open, and then if you want to buy it back, you buy to close. So that's what these two middle options are for. So we're going to do sell to open, and we're only going to do one contract because I only have 100 shares, and a contract is only good for 100 shares. So I can only sell one contract. So we're going to pick an expiration date before earnings. So let's just do like April 28th. So, okay, so strike price. So here's where you got to be careful. The closer you pick to the actual current price, the higher the probability that it has to hit that strike price, which means the increased chance that you will lose money on the contract if you buy it back, or you'll have to sell your shares. At the same token, the higher you go, the less money you'll make. So you really want to pick a price that you think is best for you based on how much money you want to make from that sale and the probability you think that that strike price will actually get hit. Okay, so Apple, we can see, is currently trading at $142.18. Hasn't really moved much lately, so I'm hoping that it continues to kind of stay relatively flat. And I'm going to set a strike price. Let's see what 146 would be. So this would be like about a $4 increase from now. I'm not sure. I don't think that's that likely to happen by April 28th because it's only 15 days from now. So we're going to hit call and see what the current prices are. Okay, so remember, I'm selling, so I'm going to be getting this price, the bid price. So that means for one contract, I'll get $36. And so let me show you what would happen if I go ahead with this order. I can do a review order. And remember, they take a fee, so I'm really only getting $28.35. Now, that's not a whole lot of money, but if this contract does expire worthless, like most of them do, if you pick the right price, most of them expire worthless. This is just free money for me. Like, this is extra money that I'll make. Not even counting, not counting dividends, not counting Apple's price going up. Like, this is just another extra way to make income on your shares over the dividends and the stock price. So this is like a third way to make money on your stocks. Let me show you what would happen if I adjusted the price. So let's say I wanted to increase my chance of making money and I go even higher. Well, now I'm going to make less money because I'm taking less risk. So I'm going to make less money. And so if I do this, I'm only going to make $16.35. Again, that's better than nothing. That's better than zero. So I mean, I could do this, but it all depends on where you think the price will go. If you want to make more money, you can go a little bit closer, but then you have to know that you're going to be running a bigger risk because that price going from here 142.20 to 144, a higher probability. So I'll make more money if I sell this contract, but I run the risk of having to sell my shares. This is a lot more money, of course, but I really don't want the strike price to get hit. So I'm willing to take less profit to guarantee that I can keep my shares. So we'll go ahead and let's just do the 146 strike price and hope that. No, I wish there was a one in the middle. This is the thing. Like, do I want more profit or do I want less risk? You really have to make that decision. And again, it's free money if it expires worthless. So I guess I should be happy with anything at this point. So I will let's just do 47. I don't want to sell my shares. I'm really scared of that happening. So I'm only going to make $16.35, but we'll place the order. And there you go. So I just sold a covered call. You saw it firsthand. And now I'm going to close that. And we'll go up and check here and click refresh so you can see what happened. So I just sold the contract, so I just made $16.35. So that'll be added to my balance. So that went up a little bit. So I just made some money today, guaranteed money. The only way I'll lose money is if I try to buy this contract back for a loss. But so ideally now, since I set that strike price for 147, I am really hoping Apple just stays below that. It could go up to 146. That would be even better because we'd still make profit on our shares and the strike price isn't hit. We'd still get to keep that money. So that would be like the most ideal scenario. But really, I'm happy as long as it stays below 147. I think I'm going to do one on Twilio too. Let me just see. Now, I should probably look up when they report earnings. That's definitely an important thing because they've been going up relatively recently. So I don't want to sell one right before earnings and then they report earnings and have a really good day and then our contract will we'll have to sell our shares. So I don't really want to do that. Okay, so they reported one in February already. So that means we should be good. We could do April 28th, for example. That's only 2 weeks away, not even. Yeah, it's about 2 weeks away, but tomorrow the market's closed, so they lose a day, whoever's buying this, which is good. So okay, it's currently at $30.46 a share. Let's say, I don't know, $33. Let's see what that would cost. So if I were to sell a call for $33, I would get 23 bucks. Because it's not that likely for them to hit that price because they've been kind of struggling a little bit. So but they've been coming back a little bit. So it's not that likely it'll hit $33. Let's see what happens if it's $33.50. Yeah, $17. So we could try 33. We'll take a little gamble here. So I'm going to sell a call for 33. I'll get $23 minus the fee. And so let's hit review order. So I'll get $15.35. And since I just sold another contract earlier today, or not earlier today, like literally a few minutes ago, we'll just add that to our profits from earlier. So I'm okay with this. It's pretty much guaranteed money as long as the stock price doesn't hit 33. So I'll place the order. We'll do that, and then refresh this and see how we just sold another contract. So now we want the Twilio stock to stay below 33 until April 28th. We made $18, so that'll add another 18 bucks to our thing, which gives us more money. So if you add these two, we made $34.70. That's pretty cool for I just made some money. And that's guaranteed money. So no matter what happens, I still make that money. Again, if I buy the contracts back, I can take a loss on that, but I don't plan on that happening because hopefully I picked a price that's high enough for it to guarantee that it expires worthless and I'll get to keep my shares. That's the ideal scenario, so we'll keep an eye on that, and we'll see what happens in the next couple weeks. All right, so it's about 11 o'clock. Not much going on. We're still down, but, it's not that much. So we're going to come back in the afternoon and see where we're at. Oh yeah, I forgot to mention real quick that when you'll sell the contract, it's going to show up as -1, meaning you sold that contract, someone else has it. So it's just showing as -1, showing that you don't actually own that contract, someone else does. So that's how you'll know these are the covered calls you sold, because they'll have a -1 there. All the ones you do own will be positive. So yeah, forgot to mention that. So there you go. All right, one more thing I wanted to show you was that some stocks you can kind of see really aren't worth selling because selling options for. So check this out. I opened one for Ford, and even the strike price that's already in the money, $11, the current price is $11.19. You're not going to get much money for that. And then as soon as you go out of the money and hit call, look how quickly that option drops in value. So I'm literally losing money at this point because the fee is more than what I would make, $7, and the fee is $7.65. So the only way I can make an actual profit is if I sell it at $11, but I run a really big risk of this expiring in the money, which means I'll have to sell my shares. So this is really not a risk I'm willing to take. It's not worth it at all for me to do this. So you can see that some stocks, the price doesn't move that much, and so it's much harder to make money selling a call option. So it's just not worth it to do. So with Ford, nope, we're not going to do that. All right, so I just got back from the post office, delivered some packages. I'm getting ready to go to Chicago to meet with my girlfriend. We're going to go get some dinner together and then go to a show at the House of Blues. So that's going to be fun. Real excited for that. And let's see how we did today. We lost money, so not a great week. Definitely did bad this week. The main reason we did bad today was Amazon. So let me show you. Amazon started to pull back a bit. Let me show you on the watch list where it is. They went down $11.56 a share today. So that was really, really bad. And therefore we lost like $1,300 on our call options. So let's look at them as a percentage. So you can see how bad we did. We lost like 10% on that. We lost 18% on AMD. I think we only have one call with them now. I thought we had two still, but I think I sold one of them recently. And then the Tesla call actually did go up since we bought it. We bought it at $30.25, and it's already at $33.54. So it went up over $3, which would be $300 per contract. So we made over $600 today just on the Tesla call. So that was definitely good, helped offset our losses because we did really bad with Amazon. So could have been a lot worse, so I'm not too mad about that. As far as our balance, we're still doing okay. We were up in the mid-60s last week or the week before that, but That's okay because we started with 43, so we're still up for the year. You know, I'm trying to finish the year at 58. We did hit it a while ago and then obviously dropped below it. So I'm trying to just finish above 58 for the year. So we still got a lot of time left. So I'm not really too worried about that quite yet. Let's see how we did with the United put. Okay, so we made like $44 today on that one. Pretty good day at 28%, so that's pretty good. Again, we're looking to sell that one pretty soon. We're going to see how the courts play out. There might be a lawsuit. Kind of hopefully, and there will be, because then we'll make some more money if there is, especially if United has to pay like a big settlement. Okay, so as far as the stocks go, who did the best today? Who did the best? Hemp Americana, nice. We own that one. And Stamps.com. And Twilio did well. Tesla did well. Hopefully Tesla continues to go up because we can make a lot of money with that. Oh, and then I think Apple... Wait, what did Apple do today? Because again, we want Apple to go up, but we don't want them to go up too much because we own calls and then we also sold a call on them. So 141, they went down today. So that's bad for our calls and it's bad for our stock, but it's good for the call that we sold because we don't want that price to hit 147. We just want Apple to stay below 147. Hopefully get to like 146 because then we could make money on all of these too. That would be like the ideal scenario. So we'll see how that plays out. We have until April 28th to see what happens with that. And I hope you guys did learn a lot about covered calls today because, yeah, we talked about that a lot. All right, so that'll wrap up this week. It was a short week. Tomorrow is Good Friday, so I hope you guys have a great Easter weekend and a great Good Friday tomorrow. Hopefully some of you guys have the day off of work or school or whatever. Hope you guys enjoy the nice weather. Depending on where you live, the weather is getting nicer here in Chicago. So real excited. I might film a little bit of my little excursion in Chicago because a new Pokemon event happened today for Pokemon Go. So might do some walking downtown today before I meet with my girlfriend. So I have a little bit of time, like an hour. So I might film some of that. I might not. I'm not sure. But if not, hope you guys have a fantastic day. Hope you guys have a fantastic weekend. And we will see you guys on Monday.